All righty, I'd like to welcome everyone out to the Tuesday night, October the 16th. I have to throw an apology out there for last week. Key was supposed to be on, but he was also traveling. I was fighting some flash flooding and was doing what I could so my basement wouldn't fill with mud. So I do apologize for not having everything open. The short answer is if by 15 minutes in no one is on, go ahead and, for all intents and purposes, just go ahead and call it. No, for that reason, for some reason, I would not be in and be ready to go. So pretty simple, pretty easy to do, and we're off from there. Again, pretty easy to understand for everything. So, with that said, let's get started today. We've gone through a pretty rough couple weeks. Obviously, to be honest with you, you've heard me say it quite a few times. I believe 2008 ruined quite a bit in how people look or trade. When in 2 days, you go through over a 5% decline in the major indexes, it is a cause for worry. Now, I'll be honest with you, I didn't feel really panicked. But part of that reason would go down to the way I traded. For the most part, Tuesday of last week, I started adding protection on. Wednesday morning, I really made sure everything was on. Then on Friday, I took some profits. Monday, had some protection back on this week. And the only thing I do not have protection on is American Outdoor Brand Corp and Marvel. Under Armour, I picked up some new shares, but I also put some protection back on. And I believe for me, it was troublesome to see everything take off. It was troublesome to see everything go down. A couple of the positions that I was helpful for, so I should say no panic, but obviously it could have been the start of a serious correction. Now, there are a couple things I've been looking at. One of them was the EWZ, but as we spoke 2 weeks ago, the IWM. Anyone know what that is? Anyone have any idea? It's the Russell. And I was looking at getting into something around the 160 range, a 160 to 169. I would now change that to a 160 to a 168 bull call. But I would want to see a break in the 200. As people were talking to me, well, Kevin, what about, I'm not so sure that we're all said and done. If you were to ask me, I wouldn't tell you, hey, you know what? We're out of the woods. It doesn't seem to me like we're out of the woods. In fact, if anything, I would call this a technical bounce. Technically, we're bearish still on the Dow Jones Industrial Average. Nice bounce off the 200, but we're still between the 50 and the 200. Not bullish yet. S&P 500. Bearish without our crossovers. Nice bounce off the 200 after being down below, on and off. Same thing with the S&P 500. I'm going to get to the long term here in a minute. But really no panic. I didn't see any panic selling until the last hour on Thursday. Anytime you go from 200 down to 545, last 45 minutes, there's a worry. But again, just as a comment, due to tax savings, Christmas prep, and now people are buying stocks for the increased sales. Don't run out of the store when everything goes on sale. So I brought up the IWM. I would probably go out to a November 23rd, 2019, 2018, 160, 160, oh my gosh, Kevin, 160, 168, bull call. Typically, though, in all honesty, the quarter for the Russell is buying after Christmas and going through March. That's usually your sweet spot. But I could look at IWM. Again, I would want to see it get above the 200-day. And then I would put a stored order, maybe a trigger order as they're called, to add 160 December long puts if it trades below 160. And I wouldn't put this on the IWM until you see a bounce above the 200-day. That's going to be your trigger right there. I put 3 more stocks there. Ford. I might call Ford the effing Ford because there's no love. Did really good on its month over month. Spectacularly well. Better than expected. It's taking the more profitable positions. I should add another 100 shares of Ford for what we made on the way down, but I'm holding off. Their earnings are next week on the 24th, I believe, after the market closes. So I'm sitting on that one right now. Apple. I took profits on Apple long puts at 225. I have some back on. So I have November monthlies and the 23rd 215s. I've got some at 217.50. I've got some at 220 and some at 225. Long puts in place. Visa on shares have 138 long puts. I did have 145 straight long puts, and I had some 145 or 143, 137s, or maybe it was 145, 140. I did have multiple bear puts in place. I took those off for some profit. At least I was trying to, if they were triggered, to take some profit when we had it down around 137 so that we could book some of that profit, get maybe 460 for selling it, missing out on only 35 to 40 cents, so the total $5 on the way down. What else did I do? Looking to add leap long calls. So if I was looking at Visa right now, well, Kevin, you should have put them down at 134. Didn't make sense. Going through a market correction. Not sure what was going on. Look at the big drop down. Well, you had a doji-ish type of pattern. Probably looking at, well, I'm not sure where I want to do it. I could justify 140. I do think we'll have earnings and get back up to 150. We might have a pre-earnings run. But I'm looking to more be in the long term. I'm looking to go out to 2020 and maybe doing some 140s or even 145s and having an opportunity to see a big run up to maybe 200 on Visa. Again, it's another one that's doing everything right. It's a good looking chart. Shares have been nice. We protected shares through earnings because they do have to be perfect. And part of the problem with being perfect is that when you're perfect, if you're not perfect, you're going to see some serious profit taking occur in your stock price. It'll be ugly. It really could be pretty ugly as you just see some serious profit taking. With that said, I don't know. I've always considered Visa to be a recession-proof stock. And really that comes down to recession-proof stock because I would expect that when people don't have money or we start to go into recession, they do put things on the credit card. If I can make this comment, I do not think the rally is over. I would expect we can run through this earnings and up through Christmas and maybe get back to the highs of the year. Maybe be at that 8.5% return on the S&P 500. I think we are 100% screwed next year. In all reality, we still have that first quarter, which will be juiced because of the taxes. But for the most part, I think you will see after Q2, the beginning of next year, or after the fourth quarter of the government. Well, that's not the government, though. It's the tax run. We're just going to run into trouble. We're going to have a hard time beating the numbers. We're going to have a really hard time beating the numbers. We don't have depressed valuations. We're not going to have some growth. In fact, if I can put it this way, there are a lot of companies this year. So let me put it this way. I worry about January 2019. It'll be the last time we have our juiced earnings, but the reason why I worry about it is because if you have a 8% growth, and actually that's more of a value, right? 8% growth in a quote unquote value stock. Look at what this means for the earnings. This means a third or 2.66% is tax growth. Tariffs are 2% to 3% costs. And I'm going to say that probably won't be passed on this quarter with lower margins / operating expenses. We take that out, and all of a sudden you have a 3.33% growth rate. And out of curiosity, anyone know where we finished our 10-year Treasury bond rate at? Anyone know where that's at? I'll tell you where it's been the last 3 or 4 days. When your 10-year Treasury the last 4 days, I don't know where it's at today, but in that 3.15, 3.16, up 75 basis points year to date. And you've got your value companies that are now trading at a 3.3% growth rate that can't seem to find the how would I say it? Can't seem to find the way to make organic growth replace their tax savings. You're going to have multiple compression. You're going to have lower margins, higher operating expenses, and your comps are going to be unbeatable. It'll be really rough going into next year. This year, I don't have too much concern for. This was a great opportunity to take some profits off of some things. It's a great opportunity to get in before earnings. Facebook will be an interesting one. Facebook could trade right up to 200 with some good earnings. And it has everything behind it other than possible penalty that it may have to pay over in Europe. But the news has been pretty muted on Facebook right now. We're not hearing a bunch of fake news 3 weeks before midterms. Things are pretty, I don't know, from what we're used to, things are pretty docile right now. By way of the expectations of how elections are run right now. It's still, the narrative is not broken for the continued rally. But I think the narrative becomes broken into next year. And if you want to jump ahead of it, it will occur through the earnings in January. Those earnings in January are going to be painful. Typical market patterns are not happening this year. I'm going to blame it on Trump. That the typical market patterns that aren't happening, meaning this year we were supposed to see big growth in technology, which we did, big growth in healthcare, which has been flat, big growth in financials, which is severely underperforming the market. It's amazing. Have you guys seen all the hedge funds that are calling it quits? Has anyone noticed the number of hedge funds that said they're done? Has anyone noticed the amount of ETFs that are also done? Too hard. Pretty interesting to see no growth on a lot of the trading floors for like a Merrill Lynch, Morgan Stanley. Bank of America was awful. Didn't have a whole lot of growth in loans, but that was their profit. Pretty amazing. Pretty amazing for me. What's happened this week and why? I would call this a recovery week. I will upload last week's. I apologize it hasn't been done already, but where are markets in this week? Last week I said it was uncertainty to volatility within the individual indexes. This week I think we're going to go higher. I think we're going to recoup the 50-day simple moving average, but it probably won't happen in a day. It'll probably go up there. We'll struggle for a day, and then we'll come across. Anyone know what happened after hours today? Anyone know what happened after hours today? It will most likely move our markets tomorrow and move them in a big way. I'm going to check on my phone right now for the futures. Wow, our futures are down right now. That is absolutely shocking. I would have thought because of Netflix and IBM, I would have thought both of those would move our market higher. Apple's higher after hours, Bank of America, Amazon's higher after hours, $28. Baidu's higher. Where's Netflix at? Facebook is higher after hours. Google's higher by $12 after hours. Netflix is still at $37. Wonder if IBM by any chance. IBM is down after hours, so their guidance sucks. That kind of blows. They gave pretty good earnings that I saw. Had not gone through the guidance. So I'm a little shocked. I see the market's down right now. We have the NASDAQ down 11.75. The S&P is down 2.5. Dow's down 28. It would not surprise me to see that reversed. Europe looks big. Shanghai's not open yet. Unchanged. I don't know. I would expect us to be up tomorrow and up higher for the rest of the week. I've gone through the Dow, the S&P, the NASDAQ. I thought we would be up 1.5%. through the S&P 500. As I take a look at it here in October, I'm changing my tune to being down 2.5%. Obviously, when we started the month, got to move this over just a little bit. When we started the month, we were right around 29.20. We're sitting out at 28.09. Although, for all honesty, with good earnings, we could come right back to where we finished. So maybe instead of being, I don't know, as I look at it now, I thought we'd be a little positive because of how well. I'm going to change it. I'm going to go out on a limb here. I'm going to go 0.0%. I'm calling it flat. We'll see if we can't recover. Earnings today, Domino's Pizza, Blackstone or BlackRock, I can't remember which one it is. Goldman Sachs this morning, Johnson & Johnson, Morgan Stanley this morning, IBM today, Interactive Brokers, Netflix, United Healthcare, all did really well. Tomorrow starts the true earnings season. Alcoa with Kinder Morgan's and U.S. Bank Corp. Thursday, Dover and NUE is the energy ones. Nucor. Philip Morris is tomorrow. I will pay attention to AXP, which is American Express. Intuitive Surgical, I just follow. I have been priced out of that for a while. PayPal. On Friday, we have Honeywell, Procter & Gamble, Schlumberger, VF Corp. Economic reports probably are not going to be moving our markets, but we do have the monthly options expiration. There is nothing internationally that I was paying attention to by way of economic reports. With that said, obviously some news came out today about Saudi Arabia, and chances are they probably took out that reporter. Probably, I don't know, when you live in a dictatorship, kind of stupid to go into his palace alone. Chances are that journalist, that reporter got taken out. I don't know what's so surprising about that. Welcome to the Middle East. In the Middle East, those type of things happen. It's just the way it is. I listed out earnings that are coming up. Obviously, next week will be a big earnings week with Ford. FCX was Freeport-McMoRan. Mosaic reports next week. Visa reports next week. Next week will be kind of a big one. Baidu is uncertain. We don't have an estimated date, but they could report next week, probably the week after. Zions Bank could report next week, probably towards the end of the week. Just nothing's confirmed. Let's see what else I have for you. Pretty interesting. I found an interesting article from Barron's Magazine on how no one could really describe what was happening in the drop. There were a bunch of TV celebrities, so to speak, that were telling you, we think it's this, we think it's that. Pretty funny. Nobody knew. Nobody knew, and I enjoyed this article because it's the first time that I heard someone say, we don't know. We don't know what's going on. It could be anything. Most likely, worrying the Fed raising rates. I found an interesting article about 3 bad habits before they became successful. I'm guilty on 2 of the 3. Caffeine. The procrastinator is not a big one, but the caffeine addict and the bad communicator. I still get frustrated with people sometimes. And obviously I feel I need to fix that when it all comes down to it. Interesting article on why the last time employment was this low. We are having a recession. Understanding of when we start to get an uptick in unemployment, that's usually a precursor to a recession. Little article about Amazon's hourly minimum wages and how really they just swap some money for others. Pretty foolish. When interest rates jump, these are the best performing stocks in the Dow. Pretty interesting because it has in there some of the ones that we actively trade. Kind of surprised we haven't seen Bank of America move higher. But I did have this in here so you could look at. In fact, I think it even says Goldman Sachs. No, not Bank of America. This one's just Visa, Exxon, and DuPont. A bottom is forming. Then it'll lead to new record highs from Jeff Stout. And Larry Fink, again, looking to more on the downside. I guess the market bears. What questions do you guys have that I can answer for you? What questions do you guys have that I can answer for you? And if I can go ahead for a second here, this might be helpful for you. Give me a quick second. So for those that use the Option House or e-trading platform, there are times when you pop it up. All I am right here is I go to account, I go to positions, but also you can go to account, you can go to orders. In orders, you will sometimes see positions here that are saved. And occasionally I have saved positions when I sometimes tell clientele, hey, go take a peek, look at this, look at that. I mean, go to account, go to orders, and if I've got an order saved there, it'll be there. At the same time, if you see an O, where that's a C, but when you see an O right there, that means there's an order in place that'll be filled. So an order will be filled if it has that blue O there, and that means there's an order sitting there that'll be filled. So it's kind of an interesting little technique or something to understand more about E-Trade. What's your guess on what caused the drop? My guess is we had fear from a rate hike, and again, no patience, Abraham. I would tell you right out of the gates, our drop. So why don't I go ahead and I'll state that so it's on the record, right? Our drop, I think, was fear-induced, but it was kind of slow. So the drop was a big drop over 2 days, and 2008 put people into panic. And the reason why I'm saying that, the panic really only came at the end of the day. Go to a 3-day chart. So this was last Wednesday, Thursday, right? And what I'm going to pay more attention to is that last drop, especially in the last hour. last drop, kind of recovery, finished back down. It was so weird to see the last 45 minutes. Uh, 28.15, 28.10-ish, down to 22.75, right? I'm looking at 35 points. 260, 225, 35 points, all in that last hour, more in that last 45 minutes. When I see those kind of drops, it's people saying they've had enough. They've had enough, and they went to the sidelines. So my bet, 2008 ruined a ton of traders. When it started to fall, people were getting out. I think that's only exasperated with all the program trading that's going on right now. It's like people don't want to think for themselves. They just, the computer's going to do it, and off they go. So, Abraham, hopefully that answers your question there. Ida, do you do any spreads during earnings period using volatility, or do you avoid earnings like the plague? So I avoid spreads at earnings because the volatility can move those prices a third to half of the cost and or credit, and then you have volatility crush. So in all honesty, I am not one that does a lot around earnings by way of spreads. In fact, in all honesty, I'm a really poor loser. I hate losing. So I run all my spreads for the most part within my collars. I will, plain and simply, I will add some extra put calendars, bull puts to pay off my long puts through an earnings period. Or I might, if I'm going to get called out, take 20-25% of that profit from the stock and run out to some leap long calls to make more money on the way out. But I do not, nor would I recommend anyone use some spreads because of volatility and how it really tweaks the pricing in those spreads to the point where you could pay 100% more than you would 2 or 3 weeks earlier, and or have the stock move significantly and volatility crush kill the profit that you had there. So I don't know. I just, it doesn't make sense. Stocks can move too wide where then all of a sudden you've got too much margin to have to adjust. So not a spread trader around earnings. Any other questions you have? Lance. So Lance just asked, if you don't like Ford, why are you in Ford? I don't have to like, and I think I've said this to you a month ago. I think you asked the same question a month ago, Lance. You don't have to like a company to make money on it. In fact, there's some companies that I really don't like at all. The cannabis. I probably could have made some money on the cannabis. I just don't know how to value a cannabis stock when the majority of their profits are going to be future profits on an unknown market with no history behind it. So straight, when you have a company that IPOs, I'm not usually going to be in an IPO company. I'm going to wait for 6 months, and you kind of get a history of for what it does. But so what I'm trying to get back to, Lance, is that I'm in Ford because it's a cheaply priced stock. There's good valuation, good upside potential. Yes, they had some issues, but those issues are what I would call perceived issues, not issues that affects their bottom line. They're taking out their least profitable cars so they can focus on the trucks. Well, if we have a recession, people aren't going to buy trucks. Well, I disagree with you. I bought my truck in our last recession. Our last pullback in the market, I guess. It's 2010. In 2008, we bought my wife's car. So I would just say, Lance, that until the stock or the company looks awful, then I don't worry about it. I just don't worry about it. And thank you for pointing it out, but here's what I'm going to tell you, Lance. By doing what I do, it smooths out the movement. And I'm pretty sure I took that picture. I probably have quite a few of these I can show you. There's some days when you get a pretty good run. You typically won't get this type of run when the Nasdaq's down 100, the S&P's down 57, the Dow's down 545. But occasionally get a rebound in some things. Get a rebound in Disney. Get a rebound in Apple. You get a move in Baidu. You typically won't see these kind of movements on these kind of days in a spread trade. Majority of spread trades are bullish in nature. But when you can have a run, you can take some profits off. You can have some pretty ugly days in a down market and look awfully smart when you're collar trading. Doesn't happen all the time. But I bet I can go through and probably find a couple more. Down 17, down 9, down 100, up 13 on this one. And that one was That one was 926. Really, I thought I'd have some more in here. Here's one, 711. Down 221, down 19, down 20, up 23. What I do smooths out the downwards and unfortunately usually doesn't give you all the upwards. But I can keep taking a bunch of these. $531. Only a $2,000 drop here on a 2018 and 250. So pretty neat. I enjoy what I do. I know the process works. I know over time it's how you can shorten your time to a 4.4 year possible doubling of a portfolio. So Lance, hopefully that answered your question there. Any other questions you guys have? Earnings will probably propel us higher. We should do what we can to take advantage of this earnings season. Enjoy a short-term Christmas rally, which will probably or may occur from the end of the elections on through, I don't know, early Christmas. Let's try, probably it'll end, probably won't be any later than the 21st of December. Monday the 24th, and it's a half day. Tuesdays should probably be a whole day off, the 25th. So Christmas rally probably ends 21st. I look at it a little bit different. I think they choose something like December 10th through the 3rd or 6th of January. I look at the Christmas rally starting usually after Thanksgiving and running up to or before Christmas. All right, guys. Hey, appreciate your time. Have a wonderful evening. I will try to post this video. Most likely, I will have it up by tomorrow morning. I'll check with Dave Westlake and make sure it's there and available. He's also a little bit late on posting what I recorded Wednesday morning for you of last week. So I've got to find out what's going on. But I try to make sure it's posted either tonight or early in the morning. He's on the West Coast, and so we work that way with it. Guys, have a wonderful evening. Look forward to seeing. Next week will be a pre-recorded one. Next week, I'm traveling back from Houston, leaving tomorrow for Houston. I'll be back from Houston, coming back Tuesday evening after the market closes. So next week's, I will do one early, pre-record it, and I will email it out to everyone. Have a good evening, guys. Bye-bye.